Stocks continue to go up in value in this ever-increasing bull market. With a new political transition now in effect, bulls seem to not care as stocks continue to break new record highs. As the market continues to move up, due diligence and careful planning is needed while entering positions and buying stocks in general. For investors with a long-term outlook, unfortunate dips in the market or in particular sectors can create tremendous buying opportunities. In this video, I'll discuss 3 different dividend stocks that you can purchase in February 2021, which are still undervalued and present great opportunities for gaining large profits and building up sizable dividend income along the way. Get ready. You are now entering the Academy. Without further ado, here are the best 3 dividend stocks to look into for building a sizable dividend income portfolio. For the first stock, we have Walgreens Boots Alliance, ticker symbol WBA. Walgreens, with its high-yielding 4% dividend, makes a great investment not only for this month, but all throughout 2021. A big reason this yield is so high has to do with Walgreens stock being clobbered over the past couple of years. Increased pharmacy competition, along with reduced foot traffic tied to the coronavirus pandemic, slowed its ability to grow. Thankfully, Walgreens is already implementing a turnaround plan that should begin paying tangible dividends in 2021. One part of Walgreens' turnarounds involves cutting operating expenses by $2 billion a year. But despite trimming the fat and selling its wholesale drug business to AmerisourceBergen for $6.5 billion, is still investing aggressively in digitization. By streamlining its direct-to-consumer business, Walgreens is emphasizing a segment that offers sustainable double-digit growth. Walgreens remains one of the best bargain investments for not only capital gains growth, but a hefty dividend yield along the way. The second stock is Annaly Capital Management, ticker symbol NLY. Mortgage REITs haven't been popular with investors in nearly a decade, but the stars are now aligned for this industry to thrive. The mortgage REIT operating model is a lot simpler than it probably sounds. Companies like Annaly borrow money at short-term lending rates and buy assets that offer higher longer-term yields, such as mortgage-backed securities. The difference between this and higher yield and short-term borrowing rate is a net interest margin, or NIM. The bigger the NIM, the more money Annaly can make. During the early stages of an economic recovery, the yield curve usually steepens. This means the gap between long-term and short-term yields widen. Since REITs pay out most of their earnings as a dividend in order to avoid normal corporate income tax rates, a beefier profit might mean an even larger nominal dividend. Annaly predominantly buys agency MBSs. Agency assets are backed by the federal government in the event of default. Though agency yields are lower than non-agency assets, this added protection allows Annaly to use leverage to its advantage in order to pump up its profit potential. Overall, Annaly is a great short-term and long-term investment, and with a 10.5% dividend yield, the dividend income that can be attained would make it a great asset for a dividend investor's portfolio. The final stock is AT&T, ticker symbol T. The growth heyday may be long gone for AT&T, but that doesn't mean this well-established company doesn't have a way to keep the needle moving in the right direction. In 2021, the company's biggest growth driver is likely to be the rollout of its 5G infrastructure. It's been a decade since American businesses and consumers had access to a significant upgrade in wireless download speeds. You can bet that enterprises and consumers will be upgrading their devices over the coming years to take advantage of these faster wireless speeds. Since data is the biggest margin driver with AT&T's wireless segment, increased content consumption just might be the organic growth shot in the arm that shareholders have long craved. AT&T is also beginning to dig in its heels with regard to streaming. Following a slow launch, HBO Max recently saw its subscriber count jump by close to 50% in a matter of weeks to 12.6 million. Subsidiary Warner Media is sitting on plenty of proprietary content that can provide a spark for AT&T and more than offset cord-cutting losses tied to DirecTV. Furthermore, with the company halting buybacks and selling non-core assets to reduce debt, management has made it clear it intends to support the company's robust 7+% dividend yield for the near term, making this one of the best long-term investments for substantial dividend income. So there you have it. Those are the top 3 dividend stocks to buy in February 2021. By continuing to employ the simple strategies learned in the 10X Academy channel, which include value investing, dollar cost averaging, and dividend reinvestment, you can create a low-risk dividend income flow that will appreciate over time and continue to pay income continuously. Through careful planning and diligent investment of capital, one can create a dividend income stream that can provide substantial income, eventually covering everyday expenditures and beyond. This video provided 3 dividend stocks that are still underappreciated as of February 2021 and can be added to any savvy investor's portfolio, providing great passive income flow opportunities. If you'd like to pick up some of these stocks now, make sure to use the Webull stock trading app, which provides a great vehicle to purchase stock commissions free, thus providing a great way to create and grow a dividend income portfolio using the methods mentioned previously. And if you register now and you make your first deposit, you can receive up to 2 free stocks that can be worth up to $1,600 each. So make sure you take advantage of this offer now. Be sure to check out the links in the description to get started on creating your very own passive income producing asset and start your path toward financial independence. Thank you for watching this video. If you enjoyed this video, don't forget to smash the like button. It will really help out the YouTube algorithm in bringing you more passive income and wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.